Chapter 4, Part 2, we're going to look at ABC costing, some more examples, lean operations, and do a cost of quality report. Now again, we looked at various ways to allocate overhead. In this part, we're going to focus on ABC costing. We're going to cover lean operations and the cost of quality reporting, which is on your homework. Now again, we have three ways we can allocate overhead. We can do it on a very high level, which is plant-wide, which is probably the most inaccurate, and you don't really have an idea of which products are using all your resources. We have a department, get you a little closer, and then the more sophisticated way is called ABC costing. Now again, whenever we're trying to come up with a rate, remember the rate is always based on an estimate. Estimated cost divided estimated usage gives you your predetermined overhead rate. Now, ABC costing, it helps with pricing and product mix, cost cutting, planning, and what it will allow you to do is change prices for products after identifying the different total cost. You might think you're making a profit in one product when you're actually making a profit in a different product. You decide to market the more profitable one and shift to the product mix away from less profitable products. So now let's take a look at an example. Now here's our example. My company estimates that they will make 1,000 of each model in the following year. Here are our activities. We have material handling, machine setups, inspection of parts, and finishing. And then we have a standard and a deluxe part. And then it tells us how much we need. Now, in this problem, remember, for setups, it's per 1,000. And that kind of changes everything when you're doing your calculations. I want to say that because when I work this problem, that's the part I miss. So I've worked every one of your homework problems, so I know how they all work. So what we're going to do is we're going to determine the total estimated overhead costs, the plant-wide overhead rate, and then the cost using ABC costing. So this is how I work the problem. The first thing is I came up with this little chart in Excel. And the first you want to do is determine the total usage. So I took the standard and deluxe and added them together. The next thing is I'm going to determine how much activity per wheel. So we have material handling, machine setups, insertion of parts, finishing. And then I'm going to multiply times the total usage. And now I have the estimated activity or cost driver times the rate tells me that my total budgeted indirect overhead costs are $888,000. So that's how I came up with that. Now this is very similar to your homework. I hope that helps. Then we're going to determine the plant-wide overhead rate based on direct labor hours. In this case, we're going to take our total estimated overhead costs, which we just calculated, divided by the total estimated direct labor hours, which is 148. And then how much would be allocated to each product using the plant-wide overhead? And it would be $384.80 to the standard and $503.20 to the deluxe. Now make sure when you're doing this you use the direct labor hours because they show 2 hours in the problem. Now how much would be allocated based on ABC costing? Now here's the chart I did. I took the material handling, number of parts, I came up with took my rate times the usage for each one, and that's how I came up with the cost to allocate. Now here's the tricky part with this one. For the setup, remember it's 1,000 wheels set up divided into 20 because they're saying that's how much setups there are per 1,000 wheels. So it's 0.2. That's the factor you have to use here. Now let's look at the profitability based on using plant-wide versus ABC costing. So we know what our sales price is, we know what our total direct costs are, and now we can look at profitability. Now, if we were to do it based on plant-wide overhead, it looks to me like we'd want to produce more of the deluxe than the standard because we make more money on them. What if we used ABC costing? In that case, what we should really do is focus more on the standard because we make more profit there. So using ABC costing again, it would be better to focus on the sale of the standard wheel based on using the method. Now, costs of adopting ABC generally lower with accounting and information system expertise to develop the system, information technology. Now, are they glad? 89% of companies say it is worth the money. Not a cure-all, but helps managers understand costs better. Traditional production systems. We keep large inventories on hand. The problem is storage, high quality, and obsolescence. Changes in technology. They came up with lean production system. Now, this turned out to be a real problem during COVID because since they only had the minimum and the production lines were stopped, people ended up running out of things like paper plates and toilet paper and paper towels, as you noticed. So, lean thinking. Primary goal is eliminate waste and cost, which means your manufacturer is forced to carry the inventory instead of the merchandising company. You focus just in time, so you're going to purchase raw materials just in time for production, finished goods just in time for delivery. Lean production, common characteristics of just in time. Production occurs in self-contained cells, broad employee roles, small batches produced just in time, demand pull system, shortened setup times, shortened manufacturing cycles, emphasis is on quality and supply chain management. Now, what's the drawback of this? Well, it's vulnerable when problems strike suppliers or distributors, which is what we experienced in the last year in 2020. Because we had delays in delivery, personnel problems, and shortages, and weather-related issues. So now let's look at our cost of quality. Total quality management. The goal is to provide customers with superior products and services, continuous improvement, and more investment up front to generate savings in the back end of the value chain. So that's why we do what's called a cost of quality report. It identifies, categorizes, and qualifies all of the costs it incurs related to quality. You calculate the percentage of total costs of quality that are incurred in each cost category, used as a framework for decisions. So we have prevention costs and appraisal costs, and internal failure costs and external failure costs. So prevention incurred to avoid producing poor quality goods, appraisal incurred to detect poor quality goods, internal failure incurred on defective units before delivery, and external is when we have defective goods after delivery. So let's take a look at a problem. Now here's a problem. We have the following information. And now here's how I would work this problem, which is similar to what your homework is. The first thing I would do is go ahead and try to categorize the activities that would fall within the 4 categories of prevention, appraisal, internal, and external. That should be external costs. So, first of all, number of units, no, but that helps us with figuring things out. Selling price, yes, that helps us out. Variable cost, that helps us. Hours spent by engineers improving design, that's a prevention. Testing and inspection, that's an appraisal. Percentage of units reworked in the plant, that would be part of appraisal. Average variable rework, that would be part, I think, also of appraisal. Percentage of units repaired under warranty at home, that would be that would be internal failure, and this would be external. So the rework would be part of internal failure. When it leaves the factory, it becomes part of external. This would be external. So now that we've categorized them, now we can go ahead and do our report using the information. So this is how I would do it, which is similar to the way they show a report in the book. First, I would look at prevention costs. So the design engineering is 1,000 hours times $85 an hour. That's our total prevention costs. Appraisal costs, we have our testing and inspection, 1 hour times 6,000 units times 45. Internal failures is 10% times 6,000 units times 45. And external failure, and unfortunately, this is where we're spending all our money, which was rework, 6,000 times 8% times 650. And then we have lost profits, which is our sales price minus our variable cost times 400 units, because people decide not to buy our product because of quality. And that tells us our total cost of quality. And now what we can do is look at where is all our money going in terms of our product. And it seems we're not spending enough money at prevention and appraisal. And instead, we're spending all our money on internal and most of on external failures. So we need to spend more time up front on this product. And that should equal 100%. And that's the end of chapter 4.